Hello everyone and welcome back to another episode of the Coreco Couch. Now, on the couch today, I have two guests for the price of one. And they are here to talk about the world of self-employed. Self-employed, contractors, freelancers. And there's a lot of myths out there around self-employed and being able to get a mortgage or get finance. And hopefully we're going to bust some of those myths today, hopefully, gentlemen. No pressure. So joining me, I have, and I'm very delighted to have Keith Campsie, who is Business Development Manager at Shawbrook Retail. Welcome.
Thank you.
And his Head of Sales at Shawbrook, Chris Kirby. Hello, Chris.
Hello.
Thank you.
Thanks for having us.
Yeah,
thank you.
nice. You look nice and chilled there. You look like you've been sitting there for hours.
Yeah,
actually.
it's a comfy sofa.
It is a comfy sofa.
Yeah, it's lovely.
Yeah, so if you're worried about coming on, it is a comfy sofa.
Yes.
So, do you want to first of all just tell us a bit about your role and what you do? What does Head of Sales at Shawbrook do, Chris?
I get
Do you
asked
know?
that a lot. Yeah, you tell me. No, I think we've had over the last sort of like 6 to 9 months. So Shawbrook Retail Mortgages, as we are, it's sort of almost we've been going through a transition. So everyone will know both the mortgage lender TML brand as well as the Bluestone Mortgages brand. So both of those brands are owned by Shawbrook.
Yeah.
And effectively, what we've done is we've brought those two teams and those two businesses almost together. And we now operate as Shawbrook Retail Mortgages. And my job as head of sales is to manage both Keith and the other BDMs across the country, and really just making sure that the opportunities that our proposition provides are sort of like known, understood by brokers across the country to ultimately support more and more customers, both in the residential and the buy-to-let space. So it means I get to go out all over the country and speak to brokers all over the land and sort of see what's going on in the market and look at ways that we can sort of support them and adapt and improve.
What's Keith like to manage? Sorry, this is
controversial.
Yeah,
This isn't your.
You did say that. You did say that's some difficult questions.
I know. This isn't one-to-one.
Yeah.
Don't worry.
No, he's all right. I'll give him his dues. You're all right, Keith. Yeah.
So,
Yes.
What your day to day then, Keith? What you do day
Yeah.
to day?
So day to day will be out seeing brokers, visiting brokers. I get to be really nosy in my job. I find out about you, your business, and ultimately I'm looking to see how I can help support you get more customers into homes, help with those refinances, things like that. So I get to ask lots of questions and find out where, for us at Shawbrook, TMO and Bluestone, we are specialists. So it isn't your kind of run-of-the-mill standard cases, but it's the stuff that doesn't fit there in the high street.
Yeah.
So get into the meat of these cases, really.
Good. Yeah, you are very nosy, aren't you?
I am.
You do ask me lots of
I
questions.
love it. Yeah, I love it.
You do it in a very nice way, Keith. Don't worry. So, self-employed. So it's been a bit of a post-pandemic boom, hasn't there, really, in terms of self-employed? And it was very dicey initially, right in the pandemic, with self-employed and businesses and etc. But now we've seen a lot of people changing their lifestyle and thinking, do you know what? I never want to work in an office again. I'm going to start my own business, do things from home, or have multiple income streams. First of all, have you definitely seen that? And also, do you think that mortgage lenders are still a little behind the curve in catching up to that as a general rule?
I think you've made a really good point there about sort of like COVID and the impact that had. A lot of people, maybe were furloughed, maybe lost their jobs, and they saw their incomes change, and it was almost like some entrepreneurial sort of like boom where a lot of new businesses, hundreds of thousands of new businesses set up. Not be funny, a lot of those would have been short-term measures, and a lot of them haven't survived or haven't needed to survive the test of time. However, a number of them have actually been really, really beneficial for those that started them. So actually, there is a lot of people who would have never considered being self-employed who are now self-employed, and it's like the UK finance figures show now. I think it's just over 4.4 million people are self-employed one way or another, whether that's as sole traders, directors, contractors, and ultimately a big portion of those you would expect are going to be mortgage customers.
Yeah.
I think to answer your question, is the market, as in the whole range of residential mortgage lenders, are they fully understanding, geared up to support those? from the TML side of things, around about half of what we do is self-employed, but
Right.
it's significantly less than half of the UK
Yeah.
population is self-employed. So to me, it sort of suggests that actually that area of the market is quite underserved with your traditional mainstream lenders.
Yeah.
But that's where lenders like TML, Bluestone, and others in our specialist world are actually really, really useful and can really support those customers, because the high street models, for whatever reason, aren't geared up necessarily to deal with some of the complexities and intricacies that might throw up.
And do you think it's sort of fair that that a lot of self-employed borrowers get labelled complex? Because actually, I don't know. I've always found always found it really interesting. Is that I can set up a company tomorrow and employ both of you.
Yeah.
And you can go out and get a mortgage.
We're golden.
Yeah,
No,
we're
we
fine,
should.
aren't
I
we?
can't.
Yeah.
Or I'd find it more difficult. Is that?
I think it's strange, isn't it? Really, that it is seen as complex and it is seen more risky. But you're spot on. Like as I probably shouldn't say this, but working for a company, they could decide tomorrow actually we don't want BDMs, and I could be made redundant. But from a lender's point of view, I'm seen as less of a risk than perhaps yourself, who is a business owner and business owners. And we saw this in COVID, didn't we? And as we're talking about with lots of businesses popping up, there is an entrepreneurial type of person that goes, right, do you know what? The world's shut down. I can't do my normal line of work, but I'm going to open a different business. I'm going to adapt. I'm going to start selling my takeaways from home rather than from the high street. It's really it doesn't feel like it's people have perhaps lenders have necessarily kept up.
And are we seeing that in things like repossession stats? Is that what's behind it? In actually, if you're self-employed traditionally, are you more likely?
I think when you talk about risk is the word, and that's why
risk is the word,
lenders will have an appetite for certain customers and maybe less of an appetite for certain customers, and ultimately it comes down to their risk perception of those. I think when I look at it from the brands that we represent, actually, when we look at self-employed, we love lending to self-employed customers, and one of the main reasons that we like lending to self-employed customers is that from a risk perspective, they are no more risky, maybe even less risky than your standard customer, which is your PAYE customer. So from my perspective, we did like a real life lending report as well, and we sort of like got some of the sentiment and feeling from self-employed customers about how easy it is and maybe some of the barriers to getting a mortgage. And the self-employed customers, in my view, are significantly underserved. When should they be? Probably not, because we happily lend to them, other lenders happily lend to them, and find there to be sort of like limited or no greater risk than compared to a more normal, stable income that me and Keith as your employees would get, as opposed to you as the employer.
Yeah, you wouldn't be.
Yeah. Or last
You wouldn't
first
want
week.
to work with
Yeah.
No, I'm a control freak. No, it's all right. I'm not that bad. I love our family at Coreco. So if I'm self-employed then, and I'm thinking, because I call it the taxi driver test. Actually, every time in a taxi, they always try and avoid conversation. Sorry, taxi drivers. But they always go, "So, what do you do, mate?" And I go, "Oh, I'm a mortgage broker." And they go, "Whoa, I can't get one of those, can you? It's hard to get one of those." So there is that perception out there, isn't there? Where's that come from? And is that the press? Is that a lot of people going, "Oh, if you're self-employed, it's really difficult"? Actually, is it us as financial brokers and intermediaries that we're not getting our message out enough, or is it actually you guys? It's
probably a mix, I think, isn't it? I think it will be a bit of, historically, it's always been really hard for self-employed people to get a mortgage, and it's there hasn't always been as many specialist lenders, if you like, that have been as good at assessing income for a self-employed client. So sometimes I think there's a misconception just because of what's gone on in the past, isn't there? I think the press definitely play a part, don't they? The way that it's portrayed in the media, that it's difficult. Yeah, it is. I don't think there's one answer, is there? I think it's probably a bit of a mixture.
Yeah. I think when you talk about, you mentioned the word myths as well, and I think it's again, refer back to a report that we did, but like there's that I think there's a bit of a misconception that, well, I'm self-employed, I need to have 3 years books behind me, and I need to have steady income over those 3 years, and I need to have a 20-25% deposit as well. And actually, we know, that's not the case. Not necessarily a plug for TML, but you only need 1 year's trading, 1 year's books behind you. And
that segues nicely into my next question, actually. So what do you need?
Yeah, so, it's we'll lend to a customer, limited company director who's been trading for 1 year. I think, and they can get up to 90% LTV. So automatically there's two of those myths busted around needing 2 or 3 years trading and needing a bigger deposit, because actually trading for 1 year and getting 90% is really good. I think the other aspect to it as well is when you've got a range of lenders in the market, like yourselves at Coreco will use a whole plethora of lenders. Each of those lenders will have a different view on how they assess a customer. So whether that's looking at an average of 2 years or most recent years, or whether it's looking at salary and dividends, looking at salary and net profit after tax, looking at salary and profit before tax, automatically just by doing those scenarios and then average or most recent years, you've got 6 different outcomes of a income for one customer. And then when you factor that into different affordability models, the real challenge for a customer is making sure their broker knows how they can maximize what they can borrow based on the figures they're presenting. And that comes down to knowing the range of lenders and who looks at it a certain way.
So, when I speak to some of the members of the public and clients, their perception is that a lot of them are tainted by their first experience, and their first experience is probably their bank. So they go into their bank and they try and get a mortgage, and they're declined because they might only look at 2 years and it's salary and dividends times whatever, and that's it, and you need a big deposit. And then they go away and think, well, actually we can't get anything. So I guess it's getting that message out that there are so many different lenders like yourselves who will do everything. And you reeled off 6 or 7 different ways of looking at profits and income before you apply your income multiples. You've also got things like retained profit, haven't you? If there are some lenders who look at retained profits as well. So you've got the money in the business, but you don't feel you need to draw that out. So you've busted a really big myth there. So that's one thing about the self-employed. What about contractors? Because there was a big pre-COVID. There was a lot of contractors, and then IR35 came in, and then there were no contractors, and now there's sort of a bit more contractors again. So what do you do on that?
From a contractor point of view, we'll take their income. Generally, we're looking at a day rate. So things like IT contractors who are on, for example, £500 a day, we'll take their day rate times 5, so it's a week rate really. We always call it day rate, and then we're actually calculating what it is every week. So day rate, and then weekly over 48 weeks. And again, loads of lenders we've talked about with self-employed, people taking pre-tax, net profit, salary, dividends. For us, you've got lenders who'll take the day rate. They might look at what's the profit if they've got a limited company in the background. They might deduct certain things from pay slips. We just look at what is your daily rate, average it over a week, and then for 48 weeks of the year. So contractors, by definition, won't get holiday pay like I would as an employee. So in theory, we think they might have a few weeks off, 4 weeks off a year. So we're taking 48 weeks of income. Some lenders will take 46 weeks. So I just think when it comes to self-employed contractors, the importance of speaking to a broker is huge, isn't it, really? Because you gave that example a minute ago of going into your bank branch, which is probably the bank that your parents set up. I've got kids, and I'm setting up bank accounts for them at the moment, and they'll probably end up going into there to get their, first credit card, loans, whatever else it is. So that's where you probably end up going first, whoever you've had your current account from when you were a kid. I was that guy. I was that mortgage advisor in a big high street bank branch, and if you came to see me and you were self-employed, I wanted to sell my product, so I would give you advice on how much I could lend you with your salary and dividends. And consumer duty is obviously a huge thing, isn't it? So, if I look back then, was I giving my customer a fair outcome by saying this is what we do? And I just think like that advice bit is huge.
Well, you look now, like over 90% of mortgage business written is intermediated, and that's a good thing. you look at the number of lenders that Coreco and other large broker firms will be using, it's significant. You know, it's not just using 10 lenders and everyone fits into that. You're using a whole range of lenders.
I think we used about 72 different lenders last year.
So there you go. And there's 72 different reasons.
It's crazy, isn't it?
You know, and like you say, some of those lenders, you know, the rate almost becomes irrelevant to an extent at that point. It's about I want to buy this house. I need or want this loan. And it's finding a solution for that loan, whether the customer's self-employed, whether they're a contractor, whether they're a gig economy worker, whatever it might be. And ultimately, a lot of those lenders, there's an element of manual underwriting as well, which is really, really important, because that can be the difference between, you know, speaking to, you know, one of your brokers, speaking to our underwriters or another lender's underwriter, and understanding some of the intricacies and some of the nuances of a deal, which will be the difference between getting that mortgage offer and getting that house purchase completed, as opposed to maybe something that's 100% automated, and it looks at something at face value and it's a no.
Yeah.
When actually we know it's probably a really good customer who's going to be a really good payer. We just got a couple of questions that we need to answer.
Yeah, that's a good point. So one of your strap lines, or your strap line, is real life lending.
Yeah.
I got that right?
You have? Yeah.
There we go.
That's the research.
That's that 30 seconds of preparation for this.
I told you it worked. So real life lending. What does that mean? How does that manifest itself in reality?
Ultimately, it's pretty simple. It's what it says on the tin, is that real life isn't necessarily just passing a credit score and going to your original bank that you opened an account with when you were 7 or whatever. It is that actually some people are an entrepreneur and they are, you know, adapting their business, and they might have, you know, I've got an example of one where the guy had 6 different businesses. I've done that for 6. 6 different businesses, thumbs up. And we needed to take the pre-tax profit from all 6 of them, whereas a lot of lenders will look at that and they'll go, that's a bit complicated, that is. Or it's maybe not complicated, but it's a bit risky, because what if 3 of those businesses go under? But it's just the way that he's probably been seeing accountants.
It's probably riskier with one business, isn't it?
Yeah.
You sort of spread your risk.
Yeah, exactly that. Diversify.
There's a reason I'm not an underwriter, by the way.
There we go. I think from a real life, it is exactly that. It's, you know, again, you'll be able to tell me your business on brokers across the country that I speak to, less and less of their customers are now Monday to Friday, 9 to 5 with a basic income, and they've got a 25% deposit and they're comfortably within affordability. That probably was, you know, pretty standard maybe 15, 20 years ago. But now we've seen more and more people are self-employed. House prices are going up quicker than wages over the last sort of 10, 15 years, etc. So affordability is becoming a significantly increasing challenge. You look at adverse credit, you know, the cost of living has gone up. So there's more and more people with not even like significant adverse, but things like blips, and whether it's Bluestone or TML, there's solutions there, or of course other lenders within our peer group, there's solutions there to help those customers. And that is what real life is, if that makes sense. It's your customers that miss a payment, or they need someone to look flexibly at their circumstances. And that's where, you know, there's some automation, there's some tech that does a lot of the heavy lifting with what we do. But actually, the real life element is where there's a human involvement of an underwriter looking and understanding the customer and their circumstances and making a sensible lending decision based on everything rather than just something at face value.
Yeah. And that's quite interesting, isn't it? In terms of you mentioned the human element of actually an underwriter physically looking at a scenario. We used to call it a blank sheet of paper approach, where actually I know I can call you up, discuss a case, and actually we can have a proper conversation about the merits of someone borrowing an amount of money, and that works really well. But now we have the advent of tech, and I know you're quite a tech interested business, shall we say. How do you see tech coming in, especially something like AI? And do you think you can use it within the specialist, I'll use the term specialist, or the self-employed lending space? How is that working in your business? And are you seeing things like that starting to come in to improve it? And is there a danger that actually that takes the place of humans and you lose some of that?
I think from everything that is talked about at probably you'll probably know better than I, but at management level and senior management level, is that there's a lot of things happening with tech. AI is massive, obviously, but we don't want to get away from the human element of it, the real life element of it. So it is kind of looking at how can tech do some of the more menial tasks. So can you get tech in future to read a set of accounts? Can you get tech to do, some of the little bits? But actually, you still need that human who looks at the mitigating factors on an application, who looks at the positive factors of an application. We are doing a lot. So we've launched recently something called Cato, current account turnover. So it's a little bit like
after the Peter Sellers Pink Panther manservant.
Oh, you're showing your age there. You're showing your age.
That's over my head.
Yeah, I've just looked very blank at you there. Yeah.
What? Neither of you have a working knowledge of Peter Sellers Pink Panther?
Not really, no.
No.
Well, I know
Right,
Pink
well,
Panther.
that is your homework.
There we go, Rob. I'll jot
Yeah.
that down. I'll report back next week.
All right. Sorry, go on, carry on.
Cato, so it's assessing income, essentially. It's a bit like...
It's an auto income verification, isn't it?
Yeah, exactly that. And that's helping us. And I'll probably pass over to you, Chris, because you've been doing some research on the stats and figures for it, but it's really helping us get offers out quicker, and it is working for both employed customers and self-employed.
That's interesting.
Yeah, and it is interesting. So I think it's the way that auto income verification works. It effectively is if the data is available to us and it sort of like matches what's expected on a payslip, we don't. What's the point in asking for a payslip?
Yeah.
Because we've got that information to hand.
So is that going into HMRC and stuff like that?
To an extent, yeah. And effectively it provides us with an efficiency of not asking for a document that we're pretty comfortable we've got the information for. So whether it is that auto income verification, which is the current account turnover that Keith mentioned, whether it's AVMs, we've increased the number of AVMs that we're now doing on
AVMs
on cases.
Automated valuations.
Yep. There we go. So again, it's that efficiency. It's speeding up the time of we're having less and less of a need for somebody to physically go out, value a property. It means that it's driven by data. The data's there, so we can take confidence in the valuation that we're getting from these models. And then also as well, we very recently introduced DocuSign or like electronic signatures.
Yeah.
So again, we're not waiting for a wet signature to return to
that
them.
drives me mad, by the way.
So
any lenders watching, you still want that?
Yeah. So we've introduced that. Finally, you could say, but
yesterday.
So,
Oh, right. Is it that reason?
it's very
So we
recent.
weren't that lender until yesterday.
Oh, right.
Now
Okay.
I'm
Well
looking
done.
down my nose.
Congratulations.
So, but yeah, that's again. These are all things where when you talk about AI, when you talk about technology, we've done a lot on the buy-to-let side as well to sort of do a lot of the heavy lifting. We do, like tech does, rather than brokers have to do it. So ultimately, that's great for your customers if you're a broker, and it's great for you as a broker. 'Cause it means there's less time on a case, but also it's great for us as a lender and other lenders that are using technology because it provides them with efficiencies.
Yeah.
Those efficiencies mean that underwriters can increase their work, increase the work they get through. But ultimately, one of the really, really important things for both Bluestone and TML under Shawbrook, but also for other specialist lenders, is there is still going to be that element of human underwriting, because that's one of the real fundamentals of the space, is that human being able to look and take a pragmatic approach and make a decision. And I think it's when you talk about a lot of threats to advisors and stuff and AI, which has been touched upon, for those brokers that use 72 lenders like Coreco do, AI isn't a threat, because AI can't give advice and AI doesn't fully understand intricacies and can't have conversations with humans, if that makes sense.
Yeah.
So it provides opportunities rather than sort of significant threats in my view.
We don't want to see an AI version of Keith.
No, it's the human one's bad enough, isn't it?
We like the human one.
Yeah.
The human one is much more fun.
Friendlier.
Friendlier. Definitely.
Yeah.
So what are your sort of top tips then for anyone watching or listening who thinks, okay, I'm self-employed, contract, whatever, I'm thinking of buying a property. What are your sort of tips for them?
For me, it has to be go and see a broker. Make that one of the first things you do, because
I didn't pay you to say
I know, and I hate, because I come on this podcast, I don't want to sound like I'm going, oh, brokers are great, but actually I've been that advisor working for a bank, and I know that I could have given you one solution when there might be 6, 7, 8 different ways of looking at it.
It's really powerful.
I've got mates who are self-employed, roofers, painters, painter and decorators, all that sort of stuff. And if they came and asked me, I would say, go and see a broker, ultimately. Because I just, like, there's no two ways about it. It is so key that you get somebody who knows the market and what different lenders do to help tailor a solution to you. And also bust the myths. So we've talked about some myths earlier of, needing 3 years accounts. Another one that you hear often is, if I'm a limited company director, I'm going to up my, I've tried to minimize my tax and be tax efficient.
Yeah.
This year I'm going to take out loads of dividend income and I'm going to pay a load more tax. That actually there are lenders that will look at your profits.
Yeah.
Profits after your tax or your profits before your tax. So you don't need to go and make any rash decisions. So it might be that you see a broker, or it might be that you've got a really good accountant, or
which could save you a lot of money.
Yeah.
Not just on the mortgage itself, but
exactly that. So that's my biggest bit of advice.
Yeah, it's mine's exactly the same. It's getting yourself mortgage ready, and it's speaking to your accountant and speaking to a broker before you go house hunting, if that makes sense.
Yeah.
Understand what you want and what's possible, what's obtainable based on your circumstances before you then, because like I say, the last thing you want to be doing is going out, seeing a house, falling in love with it, and whether for whatever reason, whether it's your most recent accounts or whatever it might be, you're not able to do that. So sort of get yourself mortgage ready, understand what's possible, and then go shopping, so to speak.
That's a really good point. And it's interesting. I did a seminar a couple of weeks ago before I went on holiday with a first time buyer, and she was saying that actually, because we said, she's been thinking about it, she's been speaking to estate agents, and one of the questions was, have you spoke to a broker? And her answer was, well, no, I'm not ready to. And actually that should be, so I was like straight in there, no, that should be your first point of call before you even look at anything, is understand what you can do. And there are loads of people, I think we've just shown that actually you can get more than you think. Definitely. Now. And if you're not ready, a broker will tell you, do you know what, you're not ready, but actually let's work on a plan of how we can get you ready. And that's what's really important. It's really interesting that actually a lot of the first time buyers in this generation think that actually I need to get ready before I speak to a mortgage broker to have the property or have that.
And I think people are worried that they're going to go and see a broker and they're going to be sold to, but you're not selling them something as such. Like you're providing them with a solution and giving them advice. You're not trying to sell them something they don't need.
No, exactly.
A mortgage is, in the nicest way to mortgage advisors, and I guess it applies to us as well as working for lenders. People want to buy houses; they don't necessarily want mortgages.
Exactly.
But unfortunately, unfortunately, a mortgage for the vast majority of people is a necessity.
Yeah.
And like Keith said, when we're going in to see a mortgage broker, it's, I need a mortgage. Can you help me with this? Because it's something I need to get what I want.
Yeah, that's right.
And like I say, and rightfully so as well. Consumer duty was a really, really good thing to make sure that customers get products that are suitable for their needs and their circumstances and everything like that. So I do think there is probably an element of people thinking, I'm going to be sold to, but you're not. You're there to advise and guide as to what is most suitable based on their needs.
Yeah.
And sort of help them along the way from getting from that initial inquiry to getting the keys in the door, and then helping them for the next 25, 30, 35 years to make sure that what they've got is still the most suitable thing for them.
Yeah, absolutely. Yeah, I would say actually my job is we sell and advise on other people's products. On products that they don't even want.
Or they don't know about.
Because they don't want a mortgage.
Yeah, exactly.
They want the home. That's really interesting. So what have you got any examples of, like, I mean, you gave this one with six different businesses.
The most recent example that I am talking about until the cows come home at the moment is a client who had a huge jump in profit. So the backstory is the client they were employed. So this is what we see a lot of in the self-employed world, I guess, if you like. Client was employed. They'd set up a business on the side. So they had their annual salary, standard employee, started a business and started scaling it up. And the plan was to, I guess, ultimately leave that job and launch the business properly once they were ready to do so. because I've never set up a business, to be fair, but it's not something you can generally probably just do overnight. They essentially in their first year made a pre-tax profit of around £10,000. Quit the job, launched the business, and it went really, really well. So the second year, profit was just over £200,000. So
Wow.
It's a huge jump. And most lenders will look at that and kind of think, look, that's a big risk. Some lenders will use latest year. What we look at is the last 3 months business bank statements. We want to see that their earning is likely to match, their turnover in the business is likely to match what they turned over in the latest year. So with this business, we could see that they're growing. They're going to earn more than £200,000 profit in the following year, all being well. And we were comfortable lending based on that huge, great big jump in profit, because we'll go back to the real life. We understand that actually this is kind of quite a standard scenario, right? You're probably a bit bored in your job. You think, I'm going to go out there and I'm very entrepreneurial. I'm going to go out and launch this business. It's going to do really, really well. Back to themselves, and they've done it and they've proved it. And we're saying, do you know what? Actually, we can see your business is going to keep growing. So, for us, where's the risk?
Yeah.
And we were happy to lend to that customer.
Good example. I like that.
When everybody else kind of was saying no. So,
actually, can I ask you a bit about pricing?
Yeah.
Is that right?
I'll try and answer it.
I'll try.
If
Well, the point I was going to make is that there'll be some people thinking, okay, you do 1 year's accounts, 90% brilliant, but you're going to charge the world for that, aren't you? Is that how does that pricing sort of work? And because some people are thinking, oh, it'll be 8-9% and I won't be able to afford it. But what's the reality of the situation? Obviously, it's going to be you do price for risk.
Yeah.
But
it's a valid point as well, because we know in our space, TML and Bluestone in the residential space, we're more expensive than the high street lenders. Yeah, we understand that, and I think it's for using that word risk, we're lending to customers that the high street or other lenders won't lend to.
Yeah.
So I guess it could be not being mischievous, but you could almost say to the other lenders, well, why won't you lend to this customer? You've got the best rates. Why are you choosing not to lend to them rather than you guys are lending to them? Why are you charging a little bit more to do so? I think what I would point out is that the gap between the high street, so to speak, or the cheap lenders that you'll see on the first page of sourcing compared to where we are, I think that's another myth as well. To be honest, I don't think it's definitely not as big as what maybe the media would make out to be, or maybe what the customer, the Joe Blogg's perception of it may be. And I think it is ultimately as well is, I don't see a problem of almost not presenting both solutions to customers, but if a customer is saying, I'm self-employed and I've got 2 years trade and I've got a big jump in my figures and I want to borrow, pluck a number out of the air, £400,000. I don't think there's necessarily a problem of saying, as a broker, your job is to almost repeat back to the customer, you've told me that you've got this deposit and you want to borrow £400,000 because you want to buy this house. Yeah. Based on your circumstances, you're self-employed, you've had a jump in your figure and we need to use your profit before tax. There is a specialist lender called the mortgage lender, and their rate, don't quote me on this, because it might be, but their rate might be 5.39%, for example. But they will give you the loan that you want. There might be cheaper lenders out there. However, they won't necessarily give you the level of borrowing that you are telling me you need, which is 400,000. You might be able to get 4.6%, but you might only be able to get £350,000 or £370,000. So it's all about just sort of repeating back to the customer, saying, look, you've told me that this is what you want and what you need. Here is a solution. If they decide that they don't want to pay that, or they want to compromise on their borrowing objectives to get the best rate, that's ultimately up to them.
Yeah,
but again, your job as an advisor,
and that's what we do.
That's why you've used 70 odd lenders, because you present and you find a solution for what the customer is asking for, rather than here's the best rate and this is what it gets you. Because that's not what the customer's asking for.
Our leader Miguel, head of Shawbrook Retail, I think he answered this.
That's it.
He answered this question, I think, actually with you guys when you did a fireside chat, and his answer was brilliant. We've got one of the best propositions out there, because we'll use latest year or first year, and it's profit before tax. So, if you did my mortgage as an employee, you don't deduct my tax, you'll use my gross annual salary. We're doing the same thing essentially for a limited company director by not deducting their corporation tax. So it is first in class. It's one of the top propositions out there, and ultimately you generally pay for the best things, don't you? If you go and buy a Porsche, it's going to cost you more than it is if you go and buy a Ford Fiesta. So it's a premium product, and it is priced accordingly, was kind of how he presented it.
Pretty much.
Yeah.
With a little Spanish twang.
Definitely sounded better than the way I put it, to be fair, didn't it?
A bit of a better accent, wasn't it, than what we've got between us.
Yeah, I won't try the accent.
That was good. No, I wouldn't try the accent. Guys, that's flown by.
It has.
Yeah.
I've really enjoyed it.
Yeah,
good. No, I think that's good. Hopefully we've busted a few myths, and actually there are options out there for people. And I guess that's the most important thing to get across.
Yeah.
That there are options, and if you have gone to your bank and they've said no, don't give up. There are lots of different options out there.
100%. Like I say, customers. Not that you shouldn't be saying no to customers, but there's a very, very good chance there is a solution for a customer. It might just be maybe more expensive from a rate perspective than what they're expecting, or it might be a lender name they've never heard of.
Yeah.
But it's your, like I say, your advisors. You have confidence. You have the relationships with the lenders. That's what customers are working with brokers for.
So, last question, put you both on the spot, because I ask everyone this. What was the best piece of advice you've ever received?
I'll let you go first, Keith.
Cheers. Best piece
And was
of
it from
advice?
Chris?
It wouldn't have been from me.
Yeah.
No.
I think Chris's was get your meetings done.
Yeah.
I think mine's around, it probably sounds quite cheesy, but just around like the importance of time. And, so I guess ultimately you can make your money back. You can, if you spend money on things and do stuff, that is a material thing, but you'll never get your time back.
Yeah.
And I find that
Like that.
Yeah, I just think like when it comes to spending time with family and things like that, the time is more important than anything.
Yeah. Love that.
That's a good one, that is. Yeah.
That
I've
is a
followed
good
that
one.
up now, haven't I?
Yeah, go on.
Yeah.
No,
Bet you're sorry you asked him to go first now.
Oh yeah, I should have used that myself. No, I think for me, there's a couple really. What they are really, really quite basic, but they really give you a good foundation to sort of, especially in the industry that we do. And one of them is it's that classic, don't overpromise, if that makes sense. It's manage expectations, don't overpromise, because there's a good chance you'll end up under delivering.
Yeah.
A real base. If you don't know the answer to something, be upfront and say, look, I don't know, let me go find out and give you the correct answer, rather than get it wrong.
Yeah.
I guess the other one as well is it's not worrying, but there's certain things that you can control. Do you focus on those and do those? Don't worry about the things that you've got no control over. If you like the elements, the variables that you can have an impact on, you focus on those, worry about those, get those right, and then everything else will sort of fall into place around that.
Love that. Well, thank you very much, gents.
Thank you.
Cheers, Andrew.
Thanks, both of you. I've really enjoyed it.
Cheers.
Hopefully you have. Thank you all for listening or watching. Tune in next time to find out who's going to be next on the Coreco Couch.